Hey everyone, Tyler from Stock Scores here. In this video, I'm going to show you my favorite indicator, the one that I use for virtually all of my stock trading strategies. All right, welcome to my video, the most important indicator for my stock trading strategies. In this video, we're going to cover a lot of topics. I thought I would give you a little bit of an overview before we get started. First, we'll talk about the theory behind my indicator, and then we'll explain what the indicator is itself, some of the important rules for using it. We'll look at some swing trade examples. A swing trade is a trade where you hold for anywhere from 2 days to 2 weeks. We'll look at the process for finding trades, the tools I use to find my trades, both day, swing, and position. And then we'll go through at the end just a few examples of some day and position trading examples that have utilized this indicator with some success. All right, so let's get into some basic theory to begin. Stocks and markets go up because people are willing to pay higher prices. It's really that simple. And really what it comes down to is, what are the things that motivate people to pay more? Well, in a strictest of financial rules, I suppose, it's all about new information about a company's ability to make money in the future. So as the market gets new information about stocks and their ability to make profits, it will adjust its price for the market. The buyers will be more aggressive to buy if they have some good information. The sellers will be more aggressive to sell if they have some negative information. But beyond just information, there's a real important aspect, and that is crowd psychology. There's a tendency for people to chase the market, chase market activity. So if a stock is moving up quickly, it will attract more and more people that pile on to the story, and oftentimes in doing so, they will send the stock up too fast, or in the case of a market gripped by panic, they will send the stock price down too quickly. And so crowd psychology is really important. A stock will also go up simply because people that have shorted the stock need to cover their positions. They're losing on that trade, and they need to cover the position to, stop further losses from happening. And these are some of the reasons why people will chase stocks higher and push them up in price. Now, what we need is a way to identify stocks that investors are really willing to pay more for. And unless we have really good information about an individual stock and what that company is doing, we're really not able to predict the next winner. Only those with that really insightful information have an advantage. Fortunately for us, however, is that those people with better information will act in the market, and they will leave a trail for us to follow. So, continuing with the basic theory concept, traders make money by finding the stocks that are going into strong price trends. And if you can identify those stocks early enough, either because you have good information or because you follow the traders who do have good information, you can really benefit. So here's an example of the type of trade that I would do on a swing trade. And again, a swing trade is a stock or a trade where you're going to hold that stock for anywhere from 2 days to 2 weeks typically. Sometimes it'll be less if you have to exit at a loss. Sometimes it'll be more if the trade is really working well, but that's your typical time frame. So this stock went from $2.20 on the Valentine's Day, February 14th, and really ramped up quickly to more than, almost a double. Went up to $4.20 within a couple of days. Well, why did that stock go up? That's not really my concern. I don't actually care why the stock goes up. All I care about is being on board early in the trend. And there's some dots on this chart that I will explain in a moment. But for now, this is the kind of trade we're looking for. These stocks that can make dramatic gains, give us really significant profits in a relatively short amount of time. So the stocks that go up in these strong price trends, they almost always start their upward trends with abnormal trading activity. And this abnormal trading activity is the evidence that buyers have found some motivation to pay higher prices. Now, maybe they have new information. Maybe they're simply jumping on the bandwagon. They've found a stock that is moving up, and so they jump on and try to trade the momentum of that stock. Perhaps people that were short that stock all of a sudden are losing a lot and they have to buy that stock aggressively to cover their short position. Now, what I know from my nearly 30 years of trading is that this abnormal trading activity is what touches off these strong trends. And there's two components to the abnormal trading activity. There's the price component, stocks making significant price gains in a relatively short amount of time, and also volume, stocks trading more volume than normal. So the stock scores action candle is my golden indicator. It's the one that I've been using in some form or another for most of my trading career. In fact, I've probably used it for 27 out of the nearly 30 years that I've been trading. Over the years, I've modified it and made it better, but the concept is essentially the same as what I did 25 years ago. It's looking to identify the stocks that have motivated buyers. There's some math in that indicator, in the algorithm, that identifies, using a computer, stocks that are being bought aggressively with some volume. And if we sort of look at some examples again, you will see on these charts a little pink dot, or maybe it looks like a purple dot. I'll highlight it for you here. There's one there and there's one there. And those dots occur when the action candle indicator is triggered. And really it's a matter of the stock making that abnormal price gain with abnormal volume. And what we like most is when that happens in a situation where nobody previously really cared about the stock. So in that case, this one doesn't matter so much. It's really this one that is important, because that was the first pink dot out of a period when the market was pretty quiet. You can see the stock was trading in a narrow range, not a lot going on. And then all of a sudden it went into this parabolic upward trend. And that's, of course, where we make our profit. Now imagine buying that stock at $2.20, $2.30 a share, and 2 days later you're looking at it going over $4. Those are the kind of trades that we want to find. And there's lots of them. Every day there's stocks like that. Now I ran a little test out of curiosity. I use a platform, an analytical platform called TradeStation. And TradeStation allows me to do a lot of things, but one of the things it allows me to do is look at the stocks that have made the biggest gains over a certain time frame. So I ran a little scan using their hot list tool to look for the stocks that have made the biggest percentage gains in the last 10 trading days. And what you see on screen here is that list as of the time that I'm doing this video. Now we're going to go through all 10 of these charts and see which ones, A, went into strong upward trends and didn't just make a big price gap. Because of course, if a stock goes from $2 to $4 without trading anywhere in the middle, in other words, it makes a big price gap on the overnight from one close to the open the next day, those aren't really much use to us. We want to find the stocks that are moving up over time, because those are the ones that we can trade. All right, so let's go all through 10 of these charts. And the first one is that first situation that we want to really not even consider. This stock went from, around $1 to $5.83, simply because the company was being bought. It never traded in the middle, so that's not something we're going to worry too much about. Let's look at the second best performing stock of the last 10 days, and it is Solo, which is a company that makes electric cars, or aspires to make electric cars. And you can see the gain. It went from, say, $1.50 to $6.50 a share in basically a day. But notice that right at the start of the trend there is that pink dot. Now that pink dot is the stock scores action candle. And that is the first one that occurred after the stock was pretty boring, quiet trading. And that is the key. We don't care so much about this one or this one, because the stock is already into its upward trend at that point. It's still trading abnormally. It's still making very strong price gains, but we want those that come from quiet trading. All right, so that's number 2 performer. The number 3 performer of the last 10 days, again, at the time that I'm doing this video, is ZSAN. This stock made a huge one-day gain from less than $2.50 a share to $5.50 a share in a single day. But again, notice the action candle right there on the opening bar. Now, the chart time frame that you're looking at here, for those of you that like to look at charts, is a 13-minute, 15-day chart. I'm actually showing about 8 days on this particular example. So this is one trading day. This was the previous trading day. And you can see, going back through a number of previous trading days, nobody really cared about this stock. traded very light volume, not a lot of action. There was a little bit of buying pressure that came in the day before, and again, the action candle triggered there. But the real party got started on the open of February 21st when it traded with abnormal price, abnormal volume, and that touched off that strong upward trend. All right, let's look at number 4. And again, same concept, boring trading. And there's our action candle on the second bar of the day. And the stock there went from 80 cents to $1.50. It actually almost hit $1.60 within that day. Moving along, here's a riot, which we already looked at. But again, there's that action candle. And within 2 or 3 days, made big gains. Here is BLNK, which I think is the number 6 performer. There was the action candle. There was the boring trading. Had some more action candles along the way, but this is the one that mattered the most because it touched off the very strong upward trend for the stock to go from around $2 to $4. That's a 100% gain in 3 or 4 days. What's this one? IVC is the symbol. This one made a bit of a price gap. I don't love price gaps because they price in a lot of the performance, but notice the strong volume, notice the strong price gain. That's why we have the action candle there. Also notice nobody cared, and then some information hit the market, caused people to buy it aggressively. That causes the piling on of other traders who chase the crowd. And then, of course, anyone who is short has to cover their position, and they end up getting punished, but the buyers are the ones that benefit as the stock moves into that strong upward trend. SIC, where's the action candle? Right there. What happened after that? Big price move. ADOM, there's the action candle. There's a little action candle there. That one wouldn't catch my attention so much. I like this one a lot more because it has the volume coming in. But again, nobody cared. Now the money's coming in. And it's really obvious when you look at the chart, but as I'll show you with my tools, you need a tool to find these in a time-sensitive way. Because if you learn about it 2 days later up here, you're too late to the party. And typically these stocks that move big, they won't get reported on in the news until a lot of the move is underway. So we need a process and tools to find them, and I'll show you that later on in the video. All right, PYX, I think we're almost done our top 10 here. PYX, there's your action candle. There's the big upward trend. Another one there. That's not a bad entry, but a little late into the trend, and it continued higher from there. All right, so I want to go over some important rules about abnormal activity because it's very key to understand that not all stocks that show abnormal activity make market-beating trends. We can see examples where a stock made an abnormal break, but it didn't do anything. In fact, this one rolled over and gapped down fairly significantly, bringing a loss. And because this indicator doesn't work in every example, we have to qualify which action candles are really worth considering. And we can use basic theory of chart pattern reading to eliminate the action candles that aren't worth taking and really focus on those that are, those that have the best potential. So some of the concepts that I teach are support, resistance, optimism, pessimism, price volatility, and trends. And we can combine these things to identify those that have the best potential. And in the case of this stock, VIPS, the reason I would not take this one is twofold. One, coming into resistance, so there's an old price peak there. And number 2, it had pessimism, and pessimism is signaled by falling tops on a chart. And so although that action candle stands out and it fits our criteria in many ways, it's also actually one to avoid because it didn't have the right kind of chart pattern. And those are things that I can teach you to look for. Don't really have time in this video to go into all the detail of it, but those are things that are covered on the Stock Scores website, and I'll show you some links later where you can learn more about that. All right, so the process then. It's all well and good to say, okay, let's look for action candles, but we need a tool and a process to identify them. So for day and swing trading, I use TradeStation. Now, for those of you not familiar with TradeStation, it is a software platform. You can get it if you are a client of TradeStation, the brokerage, or you can subscribe to it. Now, I'm a Canadian, and we in Canada are not able to have a brokerage account with TradeStation, but we can subscribe to the platform. So that's what I do. And what I have done with TradeStation is created my own indicators, the action candle indicator, as well as some others, that help me find these stocks in a very timely way. In fact, I can find every action candle within seconds using TradeStation and the tools that I have. And I actually share some of those tools to my students, and I'll show you in a moment another service that we have where you can actually watch my analysis screen all day long to see the triggers of the action candles for day and swing trading. I'll show you that in just a moment. Now for position trading, I use the Stock Scores Market Scan tool, and I'm going to show you that as well. But let's first look at the Active Live screen. Now what is Active Live? Well, it's a service where essentially you're watching a video, a webinar all day long of my analysis screen. Now this screen has got a ton of numbers on it. I know it's a little bit confusing. I'll explain it in a moment here. But what this screen is TradeStation, the software package, and you are watching my screen as it runs real-time analysis on the entire US stock market, looking for the stocks making action candles. And we do it on 2 time frames. For day trading, we do it on the 2-minute time frame, and for swing trading, we do it on the 13-minute time frame. Now 13-minute is a bit odd, I know, but there's a reason for that, and I won't go into a lot of the reason right now. Let's first focus on the day trading screen. So the day trading long screen is this window right here. And this particular window looks for all the stocks making action candles on a 2-minute time frame. So you can see, for example, the time right here, that's 9:32. So ACIA made an action candle at 9:32. The price at that time was $49.92. The amount of capital to take that trade was just under $4,000 if you were wanting to take $100 of risk. Now that's before margin, so you can actually take that number and divide it by 3 to get the margin amount. So in other words, for about, I don't know, $1,300, $1,350, you could buy enough of this stock to take $100 worth of risk. Now there's some other numbers on here. This one right here, 3.77, that's the current risk-reward ratio. So if you're taking $100 of risk and you've got a risk-reward ratio of 3.77, that means your profit is 3.77 times 100, or $3,770 on a trade where you would have needed about $1,300 of capital. This number right here, the 4.87, that was the maximum risk reward so far in the day. And I did this screen capture probably about halfway through the trading day on the day that I'm doing this video. So you can see all the stocks that have triggered action candles, and there's quite a few that happened at the open. That's the 9:32. Then you've got a few at 9:34, 9:36, 9:38. As the day wears on, the number of them gets less and less, and then they'll start to pick up again at the end of the day. You can see the RR, the risk-reward ratio currently, as well as the maximum risk-reward ratio. And you can see that not every trade has worked. Anything that's red is actually a loser at the moment that I did this screen capture. And the ones that are green are in the positive. And they will be changing in real time. So as you're watching this, this screen is moving all the time. It's not only showing you the newest action candles as they come up in real time, exactly as they come up, but also showing you the current price, the current risk reward, the current maximum risk reward for the stocks that have triggered those alerts. So that is the long side, in other words, the buy side. Some days we favor shorts as well, so this is the short side screen. We either do one or the other, and depends on what the market is doing. That's why we have this market chart down in the corner. And during the day, I will give you a little bit of insight as to whether it's a day to be focused on longs or shorts. And so, sorry, this isn't buy, this is short on this side. So the short side here, the long side over on the middle. Now you're probably wondering, what is this screen? Well, it's also calculating action candles, but instead of calculating on the 2-minute interval, it is calculating on the 13-minute interval. The reason we use 13-minute is for swing trades. Less time sensitive, you don't have to act as quickly. You know, day trades require pretty quick order entry and taking advantage of the trade as quickly as you can. With the swing trades, you have a little bit more time to think. You're not going to do as many trades during the day, and you're also going to hold the positions a little longer. As I said, typically 2 days to 2 weeks. But just to give you a sense of The numbers again, you've got your risk reward ratio, your maximum risk reward. So this stock, TCRD, on the day I'm doing this video, which is February 22nd, gave an entry signal at 10:22 a.m. and currently, it's a few hours later now, it is up 6 RR on that position, which was 1,990 shares, which was a $14,000 position. Again, take that number, divide by 3 to get your margined number. When you're short-term trading, you can typically margin either 2 to 1 or 3 to 1, which means you're borrowing capital from your broker. We use really disciplined risk management and sizing of positions so that you are using that margin responsibly. And I want to stress, no one should use margin unless they have their risk management well figured out. All right, so let's move along now to the Stock Scores Market Scan tool, and I'll show you how I look for longer term strategies. So we go into the tool here, Market Scan, and I'm going to run a scan called Abnormal Breaks. I could either do morning movers or abnormal breaks. Let's try abnormal breaks and run the scan. It goes through every single stock that's listed on the US market. I could run it on the Canadian market as well. I chose to do it on the US market. And then I just look through the charts looking for the right chart pattern. So when I pull these up, that one's a little bit hard to read. Let's find one that's a little better example here. So here's one that is making an abnormal price move today on good volume. It actually started its move 3 days ago. You can see that 3 days ago it had that abnormal price jump as well with some strong volume. So running that scan 3 days ago, it would have come up then as well. I actually prefer it 3 days ago. I always like to find the first action candle from a good chart pattern. This is a good chart pattern. It's one I call a bottom fishing pattern, where we have a break of a downward trend line followed by the formation of a rising bottom and then a break through resistance from a rising bottom. Again, that's my bottom fishing pattern, and it's very good at predicting stocks that are likely to reverse longer term downward trends. So I like it as a hold today. I wouldn't buy it today. We can continue to cycle through these charts looking for more examples, and it's often as much about finding a reason not to take the trade as it is to take the trade. So here's one of those stocks where it has the abnormal activity, abnormal volume, abnormal price, but it doesn't have the chart pattern. This stock started its move a few weeks ago. That was the better time to consider it, but right now it's coming into this longer term resistance where it will probably get stuck. And so recall earlier in the video I talked about the importance of understanding some key elements of chart pattern reading. One of them is resistance, and resistance would be the reason I would not take this trade today, although if I had bought it, a month ago, it would be a good hold. So this is the tool, and you can cycle through charts pretty quickly looking for the right kind of chart patterns. Essentially, we want stocks breaking from low volatility with some abnormal price and volume action. So here's one. It's not bad. I'd give this one a 6 out of 10. The main issue here is it's still in a downward trend. It hasn't broken the downward trend. So this stock probably goes up for a few days, and then I think it will fizzle out. Those are the kind of things that I can teach you to look for and understand. So that's the Stock Scores Market Scan, which is how we find position trading opportunities using the same concept. So again, if you're day or swing trading, you want to be much more short-term where real-time analysis is important. That's where you're going to use TradeStation with my indicators, or using the Active Live service where you just watch the same screen that I'm watching to identify trades as they happen. So in order to get access to these things, I give access to a relatively limited number of traders. I don't really want a lot of people using them. The problem with indicators is that if they're really effective, they lose their effectiveness the more people use them. And so I don't make these readily available, but I'll put some links in the description of the video and I'll show you later on in the video as well, where you can learn more about how you can get access to not only my indicators, but my other tools, my processes, that sort of thing. So let's look at some more examples. This indicator, so far I've shown it to you on the swing trading time frame, which is that 13-minute time frame, but it works just as well, in fact, probably better for day trading. Works great for swing trading, works great for position trading. The concepts are all the same. The only difference is that if you shorten the time frame, in other words, let's say you're a day trader and you're going to hold for a day or less, and you're looking at a much shorter time frame of a chart, like a 2-minute chart, then you're going to have to work harder. You're going to be sitting in front of your computer more often through the trading day. If you're trading the swing trade time frame, the 13 or the 30-minute time frame, Well, you don't have to watch it as closely as day trading, although you're still going to be looking at your screen a few times throughout the day, mostly in the first hour and the last hour. And then if you're more of a longer term trader, that position trading time frame, you can do that work in the evenings or in the last hour of the trading day. You really don't have to dedicate a lot of time because your time sensitivity for the strategy is different. So here's a couple of day trades that I'm going to show you. These are all from the day that I'm doing this video, but again, simple formula. Action candle, which is our pink dot, breaking from a predictive chart pattern, and this stock went up. You can see there a number 7RR. I've actually programmed all the rules of my strategy into TradeStation, so it automatically plots my risk reward lines. And so this stock, in just a matter of less than an hour, probably more like half an hour, made 7RR, which means if you risked $100, you had a $700 profit at the top there. We wouldn't sell at the top, that's unreasonable. We wait for pullbacks and breaks of support. And so in this case, probably you get a 5RR trade out of it. That's a $500 profit for $100 of risk. Or if your risk is $1,000, that's a $5,000 profit. And by the way, the risk amount is not the size of the position you take, it's the amount that you take relative to how much you're willing to lose. And those are concepts, again, that I teach in the different areas in our education material on stockscores.com. ACHV, and again, you can see the action candles. This is a 2-minute chart. You can see up here it says 2 minute, and we've got relatively low volatility. The stock comes alive and moves up, again, 7RR in this case. All right, and not all the trades work. Here's an example of one that doesn't work, and in this case, it was a stock that made a larger gap, which I don't love. But notice that it went up to 1RR and then reversed and went lower. And in instances like that, we have to have good risk management. It's not going to work all the time, and so we use stop losses and don't size our positions too big so that we can control our risk effectively. And here is some of those longer term trades. This is position trading time frame. I've chosen a few stocks from the Canadian market because I know some of you may like to trade the Canadian market. So here is our action candle. You can see the abnormal price, the abnormal volume, a stock that nobody cared about, and then bam, it went up. Now, why were people buying here? Well, some people had better information than others, and then that brings on the crowd, and it brings on more and more people who chase the stock higher over time. That's what we want. We want to get in at the ground floor with the people that have the best information and then enjoy that big upward trend that comes out of it. Another example, there's your action candle, strong volume, strong price action, nobody cares, breaking a downward trend line. There's lots of things in this chart that make it worthwhile, but a stock that goes from $6 to $13 in 6 weeks, I don't think any position trader is going to complain about that. You can also do it on a longer term time frame. This is the weekly time frame. You can see up at the top there, it says weekly. And there's a number of action candles on here. There's one there, abnormal price, abnormal volume. There's one here, abnormal price, abnormal volume. And look at the trends that came out of that on a percentage basis. This is a large cap Canadian stock, $16 to $28 on a stock where the work required to find it was maybe half an hour on the weekend, because that weekly time frame only requires that you do the work on the weekly time frame, so Friday, Saturday, Sunday, whatever. So if you want to learn more about this, there are areas in the Stock Scores website where you can go. I'll show you that in a moment. We have the trader training area and the active live areas. I'll put some links in the description as well. I also encourage you to subscribe to this channel, the Stock Scores YouTube channel, because I'm putting up new videos every week. It's great free education content, lessons, market analysis. Also follow me on Twitter. I'll sometimes post some of my trades on Twitter just to add to some of the legitimacy of what I do. Let's jump over to the Stock Scores website and I'll just show you where to go take a look. You go to the trader training area and go to learn how to trade, and there's lots of videos and information there on my approach. If you want to learn more about the Active Live, go into the Active Live trading. And again, there's a video here that will show you how that tool or service operates, and you can learn more about what qualifies you to be eligible to use that service. All right, so that's about the end of my presentation. I hope that you've enjoyed the video. We will always follow up with new content. So again, click on that like button. It encourages me to put up more videos. And subscribe to the channel so you can get alerts when I do upload new content. Click on that little alarm button too. That'll send you an email anytime I've uploaded a new video. Hope you found it valuable. If you have any questions, you can always email me or contact me through stockscores.com. And as I always say, trade well.